Hello everyone, hope you all are fine and doing your studies well. Today I Komal Thapar is going to explain you some of the journal entries by following the rules of debit and credit, and these rules we are following by applying the traditional approach. Yes, students, before starting the journal entries, I just make you to clear again the rules of debit and credit by following the traditional approach. In traditional approach, there are three types of account. Number one is personal account, number two is real account, and number three is nominal account. In personal account, the name of the persons, individuals, or an enterprise can be included. The same way in real account, we include all the assets, whether it is tangible or intangible, except debtors. The third is nominal account. Nominal account includes all the expenses, losses, gains, and income. Now, the rules for the personal account. Rule for the personal account says debit the receiver and credit the giver. Here, DR and CR is the short form of debit and credit. The rule for the real account is debit what comes in and credit what goes out. The next is nominal account. The rule for the nominal account says debit all expenses and losses and credit all income and gains. Yes, some of the journal entries have been shown on your screen. These entries we are going to discuss today. Yes. Now, one question which I have shown in that the first line it has written enter the following transaction in the journal of Raj and Sons. So here when we are starting on the top we have to write journal of Raj and Sons. Okay. Now there are 5 columns. Number 1 is date. Number 2 is particulars. Next is ledger folio. This is the debit amount. And the last is again the amount column for the credit. Now you just see here the first transaction. The first transaction is Raj and Sons started business with cash. Yes, bete. So first of all we write the date 2017 April 1, and in this one the two accounts which have been affected, that is cash and the capital. Cash is the asset, so it belongs to the real account. So real account rule says what comes in the business should be debited. So in business cash comes in here, so cash account will be debited. And the next, here's the second account is capital account. It represents the giver name, the proprietor's name is capital over here. So the giver belongs to the personal account, and personal account rule says that credit the giver. So for credit we use word to, you just leave one finger space here and write to capital account. Yes, in front of the debit you write the amount in the debit column 50,000, and in front of the credit you write the amount in the credit column 50,000. After writing the journal entry, we have to write the brief description which is known as narration. It will start with the word being business started with cash. Now, after this, after this, each transaction you just draw a line to separate the transaction from each other. Now, next date it has given April 2. So, you just write the date April 2. The next transaction is purchased goods for cash. Beta, whenever goods is there, it is the item which have been purchased to resale. So for the goods, we are using the word purchase. And the second account which have been affected here along with the purchase, that is cash. So purchase is a nominal account, and rule for the nominal account is debit all the expenses. So purchase account I am doing here debit, and cash is a real account, and rule for the real account is what goes out credit. So here while purchasing the goods, cash goes out of the business. So here I have written two word in front of cash which represents that it has been credited. Now write the amount in front of the debit and in front of the credit in the credit column. Now narration being goods purchased for cash. Draw a line Now come to the third transaction which have been done on April 4. April 4. Purchased goods from Subhash. Beta, in this one transaction you just see the name of the individual has been given. So this is a credit transaction. Here two accounts have been affected, that one is purchase and the other is Subhash. Purchase is a nominal account, and being an expense it should be debited, and Subhash is a personal account. Being a personal account, the rule of personal account says credit the giver, because when we are purchasing, Subhash is giving goods to us. Okay, so Subhash will be credited. But if personal account, it is not necessary to mention the word account here. Clear? Now write the amount in the debit column as well as in the credit column. Narration being goods purchased from Subhash on credit. Draw the line. Next transaction is on April 5. Purchased furniture for cash. Here bete, you just observe that after purchase goods is not there. There is a word furniture. Furniture is an asset for the business because it has not been purchased to resell it again. So here two account has been affected, that is furniture and cash. Both are the real account, and real account rule says debit what comes in and credit what goes out. So in business, what is coming? Furniture is coming. So furniture account will be debited, and cash goes out. So cash account will be credited. The amount is 6,000 for debit and credit. Narration being furniture purchased for cash. Next transaction is on April 7. Sold goods for cash. Now again goods word is there. So goods के लिए हम word use करेंगे यहाँ पे sales, and the other account is cash. So sales and cash, two accounts has been affected. Cash is a real account. Real account rule says debit what comes in. जब सेल करते हैं तो कैश बिजनेस में क्या होता है? कम्स इन होता है. तो इसलिए कैश को हमने यहाँ क्या किया? डेबिट. And to sales account. Sales is a nominal account, and nominal account में क्या होता है? डेबिट ऑल द एक्सपेंसेस, क्रेडिट ऑल द इनकम. सो सेल्स से क्या होती है? इनकम जनरेट होती है बिजनेस में. सो सेल्स अकाउंट हेयर हैज़ बीन credited. The amount is 13,000. Narration being goods sold for cash. The next date is April 9. Sold goods to Mahesh. Again, sold goods. It is a item for the resale. So here one account is sales account, and the other is name has been given, that is Mahesh. So it is a credit transaction. So Mahesh is a personal account. So personal account says debit the receiver. So Mahesh is the receiver here. Receiver को हमने debit कर दिया. To sales account. Sale is a nominal account, and income should be credited here. So what is the amount here now? 15,000. Being goods sold on credit. Now the next transaction is April 10. Paid cash to Subhash. So two accounts here has been affected, that is cash and Subhash. Subhash is personal account. So personal account debit the receiver. So Subhash is debited, and cash is a real account which says what goes out should be credited. So here the journal entry is Subhash account debit to cash account with 8,000. Being cash paid to Subhash. I think it is clear to all of you. The next entry is of April 12. It says received cash from Mahesh. So here two account has been affected, that is Cash and Mahesh. Cash is a real account. So real account what comes in should be debited. So cash account is debited to Mahesh account. Mahesh is a personal account and rule says that credit the giver. So here being cash received from Mahesh, amount is 10,000. Now bete, you just see my page has been filled over here. So what I have to do, I have to do total of this page so that I can take the total to the next page. So my total is here, it is 1,34,000. Both total of debit and credit is equal as we follow the double entry system. It has two aspects and both aspect debit and credit always should be equal. Here for the total double line and right here total CF. CF means carried forward. कैरी लिख करके जाओ कहाँ पे, नेक्स्ट पेज पे कैरी फॉरवर्ड. Yes, Vite, now you just see that I have brought the total forward. So the short form it has written brought forward. Okay, the total has brought from the previous page 1,34,000 debit and credit as well, both forward. So the next entry is of April 16, purchased goods from Ravi for cash. In this one transaction, the two accounts have been affected, that is purchase and cash. We are not taking here Ravi as the giver name because whenever with the name cash has been given, it is a cash transaction. So purchase account will be debited. It is a nominal account. Nominal account rule says debit all the expenses. Purchase is a expense for the business. And the next account is cash. While purchasing the goods, cash goes account and real account rule says what goes out should be credited. So the journal entry is purchase account debited to cash account. I have written both amount debit as well as credit. Write the brief description about the journal entry. The next journal entry is of April 17, that is purchase goods from Ravi. In this transaction, only the name of the person has been given, so it is a credit transaction. Here, two accounts have been affected, that is purchase account and Ravi account. Purchase being an expense, it will be debited because nominal account rule says purchase all the expenses, and Ravi is a personal account. While purchasing the goods, Ravi is the giver over here. So personal account rule says credit the giver. The amount for the same has been written in the debit column as well as in the credit column. Then I have written the narration being goods purchased from Ravi on credit. The next transaction is of April 18, sold goods to Suresh for cash. Again here the cash word is there, so it is a cash transaction. So here two accounts have been affected, that is sales and cash. Cash is a real account and the rule for the real account is debit what comes in. So cash comes in the business while selling the goods, so cash has been debited. And sales being a nominal account and it generates, sales generates the income for the business, and nominal account rule says that credit all the income, so sales have been credited. Amount same 12,600 for this both. Narration being goods sold on cash. Now come to the transaction April 19. Sold goods to Suresh. Here again the name of the person has been given. It is a credit transaction and two accounts have been affected, that is Suresh and sales. Suresh is a personal account and debit the receiver. So Suresh have been debited and sales has been credited because it is an income and nominal account rule says credit all the income. Amount for the same has been written here. Narration being goods sold on credit. Next transaction is of April 20, bought machinery for cash. Beta here, afterward bought machinery is there, that is a fixed asset, and the other account which is cash, that is also asset. So both machinery and cash belongs to real account. Real account rule says debit what comes in and credit what goes out. So here in business, machinery comes in, it has been debited, and cash goes out, so it has been credited. The amount has written debit and credit as well. Narration for the same being machinery purchased for cash. Next transaction is of April 24. Withdrew cash from office for personal use. Whenever cash has been withdrawn for personal use, it is known as drawing account. Drawing also represent proprietor personal account, and rule for personal account says debit the receiver. So here drawing account is debited and what goes out from the business should be credited. So 2500 here I have written in both debit and credit column. The next transaction is of April 27, paid rent. Rent is an expense and expense should be debited, and while paying the rent what has gone out of the business, that is cash. Cash is a real account and real account rule says credit what goes out. So that cash has been credited for the with the 400. Now I am going to do the total for the. Yes, bete. Now I have done the total. Total of both the column is 1,77,000 and I have written here total carry forward, CF carried forward. Now I will take this total to the next page. Now total is 1,77,000 for both column debit and credit. Now the next entry is April 29, that is paid wages. Wages again it is an expense, so wages account will be debited and to cash account. So cash is a real account and what goes out should be credited. So here it is 450 and in credit column also 450. Narration being wages paid. Next journal entry is of April 30, paid salary to Gopal. Beta, this is an expense. So here we will take two account, that is salary and cash. We will not include Gopal here. Okay. So salary is an expense and expense should be debited and what goes out? Cash. So what goes out should be credited. This amount is 1200 being salary paid. The last journal entry is of April 30. Received commission. Whenever you are receiving anything, what comes in the business? Cash. So here two accounts have been affected, that is cash and commission. So what comes in should be debited. So cash account is debited and the other account is commission. So commission is an income. Commission represents to income and income should be credited. So this is 200. Now what we will do? We will do the total. And whenever we are doing the total, we are including the total of the previous page also. Okay. So here the total, final total is 1,78,850. And here we will draw the double line. I think this video will be helpful for all of you. Thank you very much. God bless you all.